Hey, good morning, everybody. Hope everybody's doing well today. Got a lot of sleep, had a good breakfast, feeling great about the world. I'll take a picture of that one. We're probably going to come back and talk about it. Good morning, Jason. Good morning, Bobby T. Anyone else in the room get short right about there? Somewhere at that window inside of favorable large triggers? Anybody take profits at $100? Anybody get out break even plus a tick when that third divergence hit? Just curious because it sure does fit rules, right? So we're going to talk a lot about rules today. We're going to talk a lot about getting in, focusing on what's important. Good morning, Ziva, Bobby, Jason, Luciano. I can't remember who I said good morning to. Good morning, Gary. Guys, we're going to focus a lot today on keeping it simple, focusing on the best of the best, NG time. Need to have a good day every day, Gary, right? Every day. How do we have a good day? We follow our rules. How do we have a good day? We don't fabricate. I'm talking to myself too. Good morning, Racha. Day 4 of Combine. Gary, it shouldn't be any different than day 1 of the Combine, right? Shouldn't be any different than day 40 of the Combine. Remember that. Keep that in your head. Guys, consistency is key. Things don't change because you're scared. Things don't change. You don't have a quota. You have to do it in a minimum of 7 days, Gary. You have 50, 100, 1,000 days to hit your goal. There isn't a quota. Go read the fine print, guys, on these prop firms. It says you must trade a minimum of 5 days. You must trade a minimum of 7 days. It doesn't mean that you have to get everything done in that 5 to 6 days. Good morning, Ronald 10. Welcome to the room. Nice to have you. Guys, when you put undue pressure on yourself, it's like going to Vegas and gambling scared, right? So let's keep it smooth. Let's keep it steady. Let's focus on the best of the best. And let's put ourselves in a position to win more than we lose, right? Guys, before I do anything during the day, I come to Forex Factory and I just make sure that there's not some news coming up, something that may move the market. Today is Thursday, March 12th. Not a whole lot going on. We had unemployment claims at 8:30 a.m. At 10:30, we're going to see natural gas storage. If you're a natural gas trader, that may move your market a little crazy. 4 o'clock, FOMC member Waller speaks. 6 o'clock, Kashkari speaks. Guys, not a whole lot going on. Good morning, Cal. And that's okay, but it's important every day to make sure that you know what the news releases are, not what they mean, just when they're coming out and whether or not they may affect the market. All right, for those of you that are brand new, Ronald, I know you're brand new. I'm going to give you my speech real quick. This is my good morning, welcome to Nexgen speech, guys. I want you to do 2 things for me. As a brand new user, I want you to allow yourself to be new, okay? What does that mean? It means that you're not expected to understand everything on day 1. You're not expected to be an expert in the first couple days. Guys, right now you're just getting used to how we teach, what we see. What I'm going to do is I'm going to teach this class, especially in the first hour, as though you were new. We're going to keep it very basic. I'm going to show 3 very basic concepts for a high probability trend trade, a trade that typically wins 70 to 80% of the time. And I'm going to ask you respectfully, and this isn't just for you, Ronald, or anyone else on demo brand new. This is for you guys coming back, really looking for consistency. I want you to let it be simple. I want you to not outthink it. I don't want you adding rules where they don't belong. I don't want you creating scenarios in your head, ifs, thens, maybes, I hope, I want. We're going to focus on some very, very definite stuff. Good morning, KR. Good to see you. And guys, everything that we're going to focus on comes right from the tutorial page in the education, or right from the tutorial section on the education page. And you'll notice that the URL says building a foundation, and that's exactly what we're going to do. Hey, Paul M., good to see you this morning. Guys, we're going to build a foundation, a solid platform from which to build. We're going to go so simple, so basic, And then you're going to grow from that for really for the rest of your life. I had someone asking me the other day, they said, Mark, what's a realistic expectation? Um, Honestly, guys, if I had to create a realistic expectation and everybody's different, this is the trade that we're going to focus on. Rule number one, strong trigger lines should take you about 3 minutes to recognize. True story. This is the easiest one, guys. It's two lines working together. Termination conditions. Good morning, Mohammed. Guys, give this a couple days. Go through. If you study termination conditions, if you go back and circle them on your charts and make sure that you get that idea, couple days on termination conditions, give yourself a couple days to be able to enter the trade. I honestly believe, but by the end of the first week, the people that are really studying, that are asking questions, that are posting pictures, can typically find an entry on a high probability trend trade. And a high probability trend trade, guys, is defined. Here we go. A high probability trend trade is defined as when each indicator on every chart agrees for the rules for a trade. And typically, this is when the triggers are their strongest, no termination conditions exist, and there's no trouble spots between your entry and your targets. Claire? I am going live and I'm not muted. Huh. Did you click on the right one? Did I click on the right one? Let's find out. Let me go to YouTube real quick, guys. YouTube is a backup for when we hit capacity. Claire, if I click on the live, there we are. I appear to be good. Maybe Control F5, Claire, refresh your YouTube, see if that helps. Or maybe because you're on YouTube and not YouTube. Haha, I kid. We don't need those E's. So guys, we're going to focus on simple. We're going to focus on a trade where every indicator lines up. We're going to focus on this trade that only has 3 rules. All right? 3 simple rules, guys. I'm going to put this in the room for you. And then Claire. Oh, Claire can't see. There we go. 3 simple rules. We're going to identify 3 advantages. We're going to do it on only 2 charts. And guys, the reason I want you to keep this simple in the beginning is because when you focus on this high probability trade, if you give me a week or 2, I don't know, Joel, because you're the user that's so nice, we've named you twice. I don't know. I'm not even sure what a double user is, to be honest with you. I'm really not even sure what it is. Is Discord giving you some guff this morning? Maybe you're logged in on 2 machines? Possibly? Maybe you have a laptop up and a desktop? I only see you once in the attendance list, though. No worries. If it's not hurting anything, just let it be. Sleeping dogs lie and all that. All right, guys, if you focus, give me a couple weeks, nothing but the best of the best, focusing on the advantages, focusing on keeping it simple, you're going to become a chart reader. And 90% of what we do every day is going to be reading our charts. 90%, guys, true, is waiting for the advantages so that we can enter a trade that typically wins more than it loses. If you focus on this high probability trend trade, give yourself a couple weeks to really learn how to read these indicators. I love to say 20 trading days, guys. That's less than a month. Get in there, focus on this chart reading. You're going to be able to open up your charts and you're going to be able to recognize where the market is likely to continue, where it's likely to go, and where it's likely to stop. And you're going to use these to enter a high probability trend trade. Guys, you're going to be able to use these very simple concepts to enter that high probability trend trade with an advantage of momentum, with an advantage of a clear path, and with an advantage of knowing where that market is most likely to continue. I'm going to say it one more time. This is a trade that when you follow these rules, when you follow the checklist that I'm going to give you today, typically wins 70 to 80% of the time. I've had people get it into the 90s, but I like to create lower expectations. And let's overachieve, right? 70 to 80% of the time. And people always say, well, when am I going to be a profitable trader? Well, as soon as you can follow rules, as soon as you can recognize advantages, and that's what we're going to focus on today. And these three simple rules happen on two charts, guys. Your 13-2 chart, this is your large chart. This is your broad stroke of a brush. And this 13-2 chart is going to give you the overall temperature of the market, right? What's the market doing in general? Well, if the background is green, that market's going up. If the background is red, that market's going down. And as a brand new user, you can give yourself the advantage of sticking with that trend. There's absolutely no need to fight a trend. Your first two rules for that high probability trend trade, guys, is met on the 13-2 as well. You're going to identify strong trigger lines. You're going to be able to identify whether or not there's something in the way that could stop that market. And this broad stroke of the brush, guys, this is going to set you up. When these first two rules are met, it means that it's time to turn your attention to a 5-1 chart. This is your smaller, faster chart. This is where you are going to refine that broad stroke of a brush. You're going to be able to identify, to pinpoint that area where the market is likely to continue. And you're going to use a limit order. You're literally going to wait for the market to come to you. And you are going to buy or sell the market in an area inside of large triggers. This is going to allow you to reduce your risk, to maximize your profit potential. So guys, right now, write it down on a piece of paper. Declare it to the universe if that's your thing. I'm going to keep it simple. I'm going to focus on advantages, and I'm going to focus my attention on a high probability trend trade so that I can learn to read my charts. Sorry about that, Claire. There was 2 YouTubes created for this date. It's probably my fault, but I'm going to blame John Novak because I think he's resting with COVID, and he won't be here to tell me I'm wrong. Sorry about that. I didn't mean to make you hunt for it this morning. So guys, 3 rules. On the large chart, we have to have strong triggers. On the large chart, we have to have no termination conditions. On the small chart, the faster chart, we're going to use a limit order to buy or sell areas inside of triggers, guys. This is your equation for a trade. A trade equals momentum plus a clear path plus an entry area, and that gets you into a high probability trend trade. Your first rule, and guys, this is the one that by the time we're done talking about it, you're going to feel pretty comfortable with this. First rule says strong triggers, and strong triggers mean in an uptrend that my small triggers are above the large triggers. That's what gives us that green background. The small triggers will accelerate away from the large triggers, and the large triggers will be widening, angled in the direction of the trend. It's the space created between the small and the large that tell me I have strong triggers. And when I have strong triggers, the odds are favorable for the market to continue up in an uptrend. In a downtrend, when the background is red, small's below the large are wide, they're angled in the direction of the trend. That space between the two lets me know that the odds are favorable for the market to continue down. Guys, you're going to hear me say it in the room an awful lot. Did you have odds favorable momentum? Do we have odds favorable momentum? Sometimes you'll see it on a chart, OFM. There's no reason to type all that stuff out. I want you to commit to odds favorable momentum for your first couple weeks as you learn to read your indicators and give yourself that advantage. Because when the smalls return to the large, we call this a weakening of the large triggers, and anything can happen up or down. What you're going to realize is that the advantage of momentum doesn't typically begin right at the very beginning of a move, nor does it continue all the way to the end of the move. So you're going to focus your attention on the time when the small accelerate away from the large until they return to the large. And on a 13-2 chart, if you scroll back in time, you're going to notice a lot of these tails, a lot of these wicks. Guys, these are potential entries on a 5-1 chart, on a smaller, faster chart. Because remember, what happens in one bar on a 13-2 happens in multiple bars on that refinement chart. So if I circle one of these tails on a 13-2, it may be an entry on the 5-1. So I want you to get in the habit of scrolling back, looking for these odds favorable momentum. Is everybody with me on this? Pretty easy concept, I believe. Separation between small and large in the direction of the trend lets me know that the odds are favorable for that trend to continue. And guys, if you open up a chart, and watch this, I'm going to do nothing but have triggers on this chart. This is the S&P for today. I'm going to take off all of my indicators. And I want you to get yourself in the habit of doing this. Open up your charts and go to your drawing tools. Grab an ellipse. Scared it may be a pullback? Oh, Ronald, you're going to learn real quick. Right now, Ronald, let me know. Are you comfortable? Just identifying odds favorable momentum. What an amazing way to start a trade, right? Knowing that you have the advantage of a market that's likely to continue in the direction of the trend. Let's circle some tails this morning, guys. And when it's time to find that entry, Ronald, we're going to do it together. Look at this. Odds favorable. There's a tail. Look what that market did. Guys, this is the S&P today. This little drill reminds us that there may not be opportunities every second, that 90% of what we do is going to be reading charts. This drill also reminds us how powerful that momentum can be for a trade. But we have to make sure that rule number 2 is met as well, right? And rule number 2 lets us know that we have to have a clear path, that there's no termination conditions present. So guys, I got 2 Ys in the room out of 42 people. Is everybody comfortable with odds favorable momentum? Give me that big capital Y in the room. Give me a smiley face. Give me a yes. Let me know that you're with me, because if you're brand new, this is a very important concept. Gary, I love it. Zeba, good stuff. I ask for participation, guys, not for me. I understand each and every concept that I talk about. I ask for participation because I don't ever want you on the sidelines wishing for clarity. Just ask. I'll stop a class and make sure that you get your questions answered, I promise. Let's make sure that we have a clear path, guys. Rule number 2 says that I can't trade into any termination conditions, that I have to have the advantage of a clear path. Well, termination conditions, you're going to recognize them with a simple comparison. It is going to be a comparison between areas and those T3 trigger lines, guys. What are your areas? The areas that can stop a market, that can create a reversal. Red Fibonacci resistance. And for those of you that are brand new, here's a great map of what you're looking at every time you open up a chart. Blue Fibonacci support. It can be a cyan divergence low. It can be a magenta divergence high. And guys, Gary's absolutely right. Post a chart and you just got a private session with me right here in front of everybody. It can be yellow 1-to-1s. Sometimes it can be a magenta midband or a green midband if those large triggers are so far away. So guys, these are your areas that might stop the market. Let's talk about how we know that it will, or at least have the potential to. And it's a 2-part process, and I'm going to take a picture of the picture because we're going to talk about 3 scenarios. The first one is that when price reaches an area, when these price bars come into contact with this Fibonacci support, it's a simple question. Where are my trigger lines? And if my trigger lines are not below support, if they all remain above, don't take any more trend trades into that area. This is an area that may reverse the market. Remember chart reading, this is an area where the market is likely to stop. So far, so good, guys. Price reaches the area, no trigger lines break through. No trades into that area. You have forfeited the advantage of a clear path. Your rules say, well, you have to have a clear path. When is an area broken? Price reaches support and none of my trigger lines break through. When both the small and the large triggers get below an area of support, when both the small and the large triggers get above an area of resistance, we consider that area to be broken, and we now have a clear path. Give me a Y in the room, guys. Once again, are you with me? No triggers through, no trade. Both small and large break through an area. Now you have that advantage of a clear path, right? Rule number 2 has been met. Not yet, D. I'll talk about that one in just a second. And there's one other look that I want you guys to understand. When your small triggers break through an area with that odds favorable momentum, but your large triggers have remained above. This is what we call a 50-50, and it's just a 50-50 because half your trigger lines are through and half your trigger lines are not. This is an area with the potential to break, but is not broken, and it relies on that odds favorable momentum. Price reaches support, absolutely no trigger lines break through. This area is likely to stop the market, no trades into it. Both the small and the large clear the area. We consider the area to be broken. You can see how it acts as resistance. Looking for those potential entries. And then when the smalls break through but the large do not, this is an area with the potential to break, but it has not yet broken, meaning that you don't have the advantage of a clear path. But what you do have is odds favorable momentum and the potential for that area to break. And guys, that's going to be your first medium probability trade. Your first medium probability trade is going to be what we call a 50-50 trade, when that area has the potential to break. And medium probability trades mean that most of the indicators line up for a trade, however a small issue exists. In this case, your small issue is very much that the area hasn't broken, but it has the potential to break. And this is going to be the vast majority of your trades, guys. And when you take this trade, you're going to take these trades and manage them assertively. Your ability to read your indicators is going to help you manage trades assertively. You'll identify trouble spots. You'll be able to take profits quickly, get to a zero loss level. And guys, when you have a medium probability trade as a new user, it's okay to demand the entry is perfect. I want you to let that ring for a second. When the 13-2, when your small issue exists, it's okay to demand that your entry chart is absolutely perfect. And I'm going to bring this picture up. When the smalls break through, when the large do not, insist as a brand new user that your entry is the absolute perfect entry. And we're going to talk about that entry in just a second. But I want to do a little review on these termination conditions. Price reaches an area of resistance, meaning the price bars come up, make contact, miss it by a tick. Ask yourself, where are the trigger lines, guys? No trigger lines have broken through this area of resistance, therefore we're not taking trades into that red Fibonacci resistance. Price pulls all the way back to support, all the way back to the mid-band area. Absolutely none of the trigger lines are through that area of support, therefore support is likely to stop the market. And guys, it's not stop the market forever. It's stop the market until the next termination condition is reached. 90% of what we do is going to be waiting for the advantages, right? Well, price comes all the way back up, hits resistance, hits a divergence high, and hits a second resistance, and your trigger lines remain below on all of them. This is what we call a divergence stop out, or a pivot stop out of a divergence high. Price trades above a divergence line and then back below. Don't take any long trades. And then if Fibonacci resistance is true at a top or support at a bottom, it adds power to the top. And D was asking, is this a strong top or bottom? So guys, I want you to remember this definition. A strong top is resistance that creates a full reversal and ultimately results in odds favorable momentum. On that same token, a strong bottom is a termination condition, a pivot stop out right here, creates a full reversal, ultimately gives us odds favorable momentum. So D, you had the potential, right? When we looked at that first picture, we certainly had the potential for a good bottom, but because we hadn't gotten that full reversal, we don't consider it a good bottom yet. We don't consider it a strong bottom yet. Even with odds favorable momentum, guys, in a downtrend, tons of momentum. Price reaches an area. Absolutely none of the trigger lines break below that area. No more short trades, right? Look at the bounce the area creates. It's not guaranteed to stop the market. But these key Fibonacci areas, we're not the only ones looking at them, guys. There's people with very deep pockets taking profits, looking to go the other direction. And the bounces they create can take you out of a trade. D, this termination condition creates the full reversal, right? Gives us odds favorable momentum. All of my triggers get above resistance, meaning that I now have a clear path. And there it is again, guys. Small's outside of the large. And there's one of those tails. There's one of those circles. That is your best of the best. That's your highest probability trend trade that you can possibly take. The high probability trend trade that presents itself after a termination condition on the 13-2. Let's look at one more termination condition, because sometimes the market turns even though it's not bouncing off a line, guys, and we're going to use a loss of momentum to help identify that. 3 divergence in the same location may terminate a trend. This is a very powerful condition when the third divergence happens with the small triggers inside of the large triggers. So for my new users, for you guys that maybe didn't pick this up in the video, what is divergence? Divergence means that when price, in this case, comes down and forms a pivot, goes from down to up, this negative number prints, the cyan divergence low prints. And guys, what that means for you simply is that momentum didn't follow price. Momentum doesn't follow price. If it happens 3 times, it may terminate a trend. It becomes more powerful when your trigger lines go from odds favorable to anything can happen, right? Absolutely. Ronald, patience, 90% of what we do is waiting. 90% of what we do is identifying the advantages, giving us the best chance of success. Right now, we've identified odds favorable momentum, right? Strong triggers. Now we're identifying when the market may terminate the trend. 3 divergences in the same location. Are you comfortable so far with that, everybody? It's just a simple equation. Momentum, strong triggers. Clear path, no termination conditions, right? Guys, clear path was my Achilles heel for quite a while. I didn't have that patience piece in the beginning. And now we just need an entry area. And Ronald, this is where the magic happens. When you have the advantage of momentum, when you have the advantage of a clear path, this is going to be the look of your 5-1 chart. Everything says up. We're in an uptrend, right? Nothing but green bars. Large triggers are wide, overlapped, angled in the direction of the trade. This is when we're going to make the decision as Nexgen users that it's time to look for an entry. Rule number 3 says that I am going to buy or sell. In this case, buy because we're in an uptrend. I'm going to use a limit order to buy a pullback at an area inside of favorable large triggers. Guys, the areas that trend trades originate from are going to be mid bands. It's going to be 1-to-1s, or it's going to be Fibonacci support or resistance. Trades originate from an area. I want you to think of areas as that big brick wall that you're throwing a tennis ball against. And we're going to let the market come to us, come to those areas. And a pullback is just a small retracement in price, counter to the underlying trend. Which means that in an uptrend, you want the market to come down. And in a downtrend, You want the market to go up to get you to that best of the best entry. Pullbacks start with a reversal bar. And a reversal bar is just a bar going the other direction, right? This signals the beginning of the pullback. We're going to build a window of opportunity, and we're going to pinpoint where the market is likely to continue, guys. Your window of opportunity will extend from the highest point of support inside of favorable large triggers to the lowest point of support inside of favorable large triggers. Our job, because we've identified momentum, because we've identified no termination conditions, and because we've created this window of opportunity where the market is likely to continue, is to simply put a limit order right at the top of that window and then realize that everything is out of our hands from that point. The market's either going to come back to that window or it isn't. And if it does come back to that window, you're now long at 79.21. Long means that you've bought the market, that your expectation is that that market is going to go up. Why did we get long? We got long because the equation was true, because we had the advantage of momentum, we have the advantage of a clear path, and we now have that advantage of an entry area, that area where the market is likely to continue. Because we've created a window where it's most likely to continue, guys, our initial stop, our protective stop, will go below that window of opportunity, below those large triggers, below those areas. Because if the market continues through, and remember, anything that wins 70 to 80% of the time, mathematically obligated to lose 20 to 30% of the time. If it comes below that window, I no longer want to be in this trade. And that's where my protective stop goes. But guys, I will take this trade 1,000 out of 1,000 times. With those advantages, with that entry, 70 to 80% of the time, it's realistic to expect this to hit that target. Once the reversal bar happens in the direction of my trade, guys, I'm going to reduce my risk. I'm going to take this picture and use a stamp. My initial stop, below the window of opportunity, the market moves in the direction of my trade. I have reduced my risk because I waited for the market to come back to that best of the best spot. What else have I done? And guys, this is important because we're all here to make money. We've increased our profit potential by waiting for that market to come to us rather than chasing the market. Brand new users, you're going to do this one. I've done it. In the beginning, you're developing trust. Trust in the methodology, trust in the rules, trust in the looks. And you're going to start to watch those ticks, and that market's going to look like it's going. And you're going to panic, and you're going to jump in right here. Has anyone ever done that? Has anyone ever had that fear of missing out and said to themselves, man, I better jump in now? So that's why we take pictures. That's why we practice. That's why you guys post in the room. Because what have you done here? You did it yesterday, Ronald? Well, we've increased our initial risk exponentially, haven't we? Because our stop still has to go where the market shouldn't. And here's the one that hurts my heart, is look at all the profit potential that we've taken away on that trade. We knew that we had the advantage of momentum because we studied it. We took pictures of it. We knew that we had the advantage of a clear path because we studied those termination conditions. And we were able to pinpoint, guys, look at how easy that is. From the top of the triggers to the bottom of the triggers, from the highest point of support to the bottom, we've created a window where the market is most likely to continue. Guys, I've studied this trade for longer than I can remember. And I have such a level of faith in this trade that 1,000 out of 1,000 times I'll take it. I hope you guys will too. I hope that you'll take that trade every time it sets up. But it takes a little bit, doesn't it? It takes just a little bit to learn it, to trust it. Guys, here's one from yesterday afternoon. Can we go through and see if this one fits the rules? I want you guys to help me out. Small triggers are below the large triggers, and the large triggers are wide and angled in the direction of the trend. Guys, give me a Y in the room. Let's annotate a chart together. Do I have odds favorable momentum? I'm going to use my call out button. So rule number 1 is met, right? Rule number 2 says a clear path. Have I reached an area likely to stop the market, or do I have a clear path all the way to the next Fibonacci support? Is everybody comfortable? We have a clear path? Well, this picture doesn't quite catch all of it. Guys, there's my entry yesterday at the lowest point of support inside of favorable large triggers. Did I follow rule number 3? Was I patient? Did I wait for the best of the best entry? And guys, there's one of those try to get me in early bars, right? We've all done it. I waited for the best of the best. Guys, when I got this reversal bar, when my first profit target was hit, I had 3 ticks of risk. I had $75 of risk on this trade, and I made $300 in about 2.5 minutes. Good morning, Safia. Guys, this is my best of the best trade. This is the high probability trend trade. What I teach you guys in class is exactly what I trade myself, because I believe in it, because I've done the testing in it. And that belief comes from study, right? We've already found odds favorable momentum. Let's put some indicators on this chart. Let's make sure that none of those tails are trading directly into an area likely to stop the market. Will you guys do this with me? And then we'll go through and we will bar by bar come up with an entry together as well. And we'll see what we can do. Smalls are through, large or not. Guys, there's one of those tails. Racha, great question. You are not trading tails, Racha. And I want everybody, what we're doing right now is we're studying. So Racha, what we're doing right now is we're studying. We're going back historically to develop some trust in these rules, identifying strong triggers and no terminations, encircling tails. And then Racha, what you're doing is with that circle, after the fact, does it end up at an area of support or resistance inside of favorable large triggers? So what you're doing right now is we're just studying. We're going back historically and looking at these patterns. And the entry rules on the 5-1 show us where the tail is most likely to happen. Do not wait for the tail to form to take the trade. It's long gone by then. Because guys, the start of the pullback begins at the top of this bar. The tail, the place where it's most likely to form, Racha, is an area inside of favorable large triggers. If you wait for this tail to form, the market's all the way up here. Does that make sense? So Racha, see how we went back in time and circled that tail? Let's see what it looks like. Well, at the first pullback, watch this. And guys, this is a big deal. Here's the top of my triggers. Here's the bottom of my triggers. Whoops, the bottom of my triggers are a little bit higher up here. Make it so you can see it. Where's the area of resistance inside of favorable large triggers, guys? If I squeeze it, do you see how my window of opportunity is up here at resistance at the mid band? Guys, give me a Y in the room if you see it. Because this is an important concept. Did it reach an area of resistance inside of favorable large triggers? It didn't, did it? And what does that mean? That means that the rules weren't met. This isn't our trade. Well, guys, if I scooch over just a little bit and we do that same drill from the top of the triggers to the bottom of the triggers, there's our window right there. Give me a Y in the room if you see it, guys. Here, price pulls back to that window, doesn't it? Why does it pull back? Because the sellers wanted it to. That's the best answer I think I can give you, Cal. Why does it pull back? Because when everybody says that we're going with momentum, when everybody says we have a clear path, there's a small group of people that prefer the market goes the other way. Thank goodness, because it's their efforts that get us this pushback right back to the best of the best area. Does that make sense, Cal? We rely on some people fighting the trend because it's inside of favorable large triggers. That's a great question. So let's look at a couple of them. Why do we look for this area? Because this is the area where the market is most likely to continue. Cal, Nexgen's been around for 25 years. In these 25 years, there's been an awful lot of study, not only by Nexgen, but also by the people that use the software. And what we found is that when the conditions are correct on the 13.2, when you have odds favorable momentum, when there's absolutely nothing in the way, the most likely point of continuation in the market is an area inside of favorable large triggers. So what we do is when the rules are met, we start to look for these areas inside of favorable large triggers because they give us the highest advantage getting in where that market is likely to continue. And I don't know why this is loading up like that. So when the rules are met, Cal, do you see it? Strong triggers, haven't reached the area. Racha, we're not trading the tail. Countless hours of study let us know that the odds are favorable for the market to continue right here at that window inside of favorable large triggers. And sure enough, it does. You're missing here only most of the times. Hey guys, do you see how 3 divergences print? Small triggers inside of the large? It may push up a little bit, and sure enough, it did. You're missing your entries, Racha? Let's do it again. It takes practice, doesn't it? But let's do this first. Price reaches 1-to-1s. Do any of my trigger lines break through? What do you think, y'all? Price reaches 1-to-1s. 0 trigger lines break through. Do I need this circle? Awesome, Safia. Reboot. I can't take that trade because we've reached an area likely to stop the market. I'm not willing to give away the advantage of a clear path. Same thing for this circle. Here the smalls are breaking through. We're still not there, guys. This circle drill is going to remind you that you don't have a perfect trade every second of every day. But what happens if you're patient, if you wait, you'll typically come up with one. As the small begin to break through, we get the pullback. And then that one didn't get inside. Racha, we're going to find one. All right, we're going to go to a market and we're going to find the perfect entry. Are you ready? Let's get rid of some noise. Let's do this together, guys. I'm going to get rid of my templates because, and for those of you that are going, but Mark, maybe there was a termination condition. Guys, we're only focused on entries for a second. So let's make sure the conditions are met on the 13.2. You guys ready? Play along with me, please, guys. This is a great drill and something that you can do on your own, in your own time, to get better at entries. Do I have odds favorable momentum? The smalls below the large are beginning to turn, to widen, to angle in the direction of the trend. Has rule number 1 been met? Everybody's comfortable with this, right? Ronald, what do you think? Feeling good about it. Odds favorable. Guys, this is the easiest one to get, isn't it? Here's another one. Let's take the pressure off of you. Have we reached an area likely to stop the market, guys? Has price reached blue Fibonacci support on the 13.2? Has price reached 1-to-1s on the 13.2? Remember, termination conditions, those areas we're looking for on this chart, right? Guys, I'm hoping that this blue line pushes me back to an entry. So rules 1 and 2 are met on the 13.2, guys. I've got momentum. I've got a clear path, and now I just need to find an entry. And my 5-1 chart is just going down. And I'm starting to say, holy smokes, it's going without me. I'm never going to get paid. This is the worst day in the world, right? Let's start looking. Where are my triggers? Well, they're all the way up here. I've got 1-to-1s. I've got a mid band, and there's resistance. But what am I waiting for on the 5-1? Racha? What starts a pullback? What lets me know that the market may be coming back to a potential entry? Nope, not divergence. That's all right. That was a good guess. How about a reversal bar? What does that mean, Racha? That means, nope, Cal, not a long wick. Because, Cal, these long wicks happen on the 13.2, right? I want a reversal bar. And, guys, I want you to write that down on a piece of paper. I want you to burn that phrase into your brain. A pullback begins with a reversal bar. There it is. Take this picture. Let's take one. Let's put it in the room. I'm going to draw an arrow. And guys, this is what I want you to do. I want you to use your cameras all day long. This is a reversal bar. Let me see if I can make this actually fit. But I want it big, right? What does writing this down do for me? Does anyone else learn like me? If I write something down, it sticks a little better. This is a reversal bar. This begins the pullback. Guys, if I write it on my chart, my brain has to process it, right? I have to think it out. I have to spell it out. I have to make sure. Is everybody comfortable with that? Cal? Racha? This is the reversal bar. This begins the pullback. All right, let's get back to finding it. At the time of the reversal bar. Guys, if you're going back and studying, and you can even do this real time, take your box. Go from the top of your large triggers to the bottom of your large triggers. Do you see what I've done? From the top of my large triggers, I wonder if we can make that a little easier. I like that better. From the bottom of my large triggers to the top of my large triggers, guys. All I'm doing is identifying triggers, but what are we trading from? My rules say I'm going to buy or sell a pullback at an area. So where's my lowest area? Guys, where's the lowest area inside of favorable large triggers? Remember, areas can be Fibonacci resistance. It can be Fibonacci support. It can be 1-to-1s. It can be a mid-band. What's my lowest area, guys? Talk it out. And if you're not sure, it's okay. The fibs at the bottom. So I'm going to scooch this window right to those fibs. What's my highest point of resistance? Is this Fibonacci resistance inside of the favorable large triggers, guys? It's not, right? Racha, perfect. So there's your window of opportunity. Is everybody comfortable with that? This is the area where the market is likely to continue. With that advantage of momentum, with the advantage of no termination conditions, this is the point where the market is most likely to continue. Why, Cal? Because that is the point of Fibonacci Because it's the areas inside of favorable large triggers. Because price typically snaps back to large triggers. And when there's a key Fibonacci area inside, that's where it's most likely to continue. How do I know this, Cal? Because I have 7,000 pictures where I study this look. Cal, you have a spreadsheet with at least 70 pictures of this phenomenon happening. And I guess the technical reason why it happens is because when everything says down here, Cal, there's a small group of people that would rather the market goes up. And these Fibonacci areas represent a psychological point where these guys pushing the market down are going to tell these guys, sorry, I'm not going to let you push any further. The reality is, I don't care why it happens. I know where it's most likely to happen through study. This fib here, Zeba, is it inside of triggers, 7810? Where are your triggers? Do you see it? That's not inside of it, is it? It did. If I scroll all the way back here, it's inside of it, but I don't have a reversal bar. So I wait for the reversal bar, and it's not there, is it? Do you see how that works? Guys, don't get caught up in what has happened so much. Don't get caught up in what you hope happens. What's happening right now? Right now I have a reversal bar. Right now you guys have done an amazing job of identifying the area of resistance inside of favorable large triggers. I'm going to put a limit order right at the bottom of that window, maybe a tick below, a tick or two below. Is everybody comfortable with that? Top of the triggers to the bottom of the triggers. Because of the momentum, because of the clear path, I'm going to hit the low end of that window, guys, because there's not a lot to slow this market down. Is everybody comfortable with that? This is where I would right click. Oh, I can't sell it. Cool. So what do we do now? Our only option is to wait, isn't it? Is it gonna come get me? Oh man, look at that. It didn't come get me, did it? Guys, should I jump in here or should I wait for the absolute highest advantage? Should I wait for that area where the market is likely to continue? This is a decision that you're gonna have to make as a new user. If I get in here, my stop still has to go up here. Uh-oh. Guys, I'm glad we didn't jump in. See how my mid-band continues down? It's okay. Drop your order entry down a little bit, guys. Don't trip over pennies. Boom. You are entered a tick or two below the area of resistance inside of favorable large triggers. Can we slide the window again? Do you see it? Cal, why does it happen? I don't know, but it happens a lot. Is everybody comfortable with that process? Rules 1 and 2 met on the 13.2. Wait for a reversal bar. At the time of the reversal bar, identify your window of opportunity. Your limit order belongs at the bottom for a short, at the top for a long, and take this trade. And guys, we're going to talk about a very mechanical approach to, Walter, right there, a tick or two below the lowest point of resistance. So if we come back through it and we look at some windows of opportunity, in this case, Walter, the highest point of support inside of favorable large triggers, the highest point of that window inside of favorable large triggers, right at the top of that window. And then if we're going the other direction, whoops, well, that's a good picture too. That shows both charts. Right at the bottom of that window, giving me the best chance of success. Right at the bottom of that window. Can they be enlarged? I can do one better than that, Cal. I'll put them in the room for you. Remember, you can click them and drag them Sure. Walter, what a limit order does, and let's go to the live market and I'll show you guys. What a limit order does for me is that if I have odds favorable momentum, if I have no termination conditions and I right click and activate a limit order, Walter, this is saying that if price comes to 77.98, I want to be in a long position. Does that make sense? This actually lets me sit and wait for the market to come to me. On the flip side, if I'm looking for shorts, and guys, this isn't a rules met, if I sell limit, it means that if the market comes to 78.31, I want to be in a short position, which of course is absolutely insane because look at the direction, look at the momentum. Let's put some templates back on, guys. Let's get some fibs. But guys, your entries, if you give yourself a week or two to just practice nothing other than entries, to go through and put those tails, right? To go back historically and circle your tails, you begin to build confidence in where that market is likely to continue. Price reaches an area of resistance, guys. Absolutely no trigger lines have broken through. Which rule has not been met? What do you think? I have momentum, right? Small's above the large are wide. They're angled in the direction of the trend. New users, let me know if you see it. Do you see the momentum present in the market? Exactly. I don't have a clear path, do I? My small triggers haven't made it through resistance. My large triggers haven't made it through resistance. Guys, this is an area with the potential to stop the market. Because it has the potential to stop the market, I have zero interest as a brand new user taking a trade directly into it. Is everybody comfortable with that? Guys, all we're talking about right now in the first hours are identifying the rules in the moment. We're going to go through and start looking at your charts. We're going to keep going back and forth through the market. Small triggers are starting to break above now, right? Which means that this is an area developing the potential to break but hasn't broken. So guys, let's do a drill. Just for grins, this is the top of my large triggers and this is the bottom. Does everybody see it? I'm not saying that there's a trade to be had, but we can still identify, right? Where's my highest point of support inside of favorable large triggers, guys? Is it a mid-band? Can I squeeze this down to the mid-band? My lowest point of support is inside. It's those fibs. Can we say that if this was a rules-based trade, somewhere within this window is the most likely spot for the market to continue up if we had odds favorable, if we had a clear path? And then guys, Gary just put an amazing example of what a limit order actually is. Walter, that was a good read right there. My small triggers never fully broke, did they? Does everybody see that? They tried to, but the small triggers haven't broken, which means I don't have a clear path, which means technically I don't have a high probability trend trade. I don't know what's going to happen to the market, guys, but I do know that without that advantage of a clear path, my likelihood of success goes down dramatically. All right, guys, before we take that first break, let's go through this why thing again. Is everybody comfortable with momentum, being able to identify when the market's likely to continue in the direction of a trend? I hope so. That's step one. Are you guys comfortable that if price reaches resistance? Absolutely. CJ? See how this line of the small triggers remains below the area of resistance? It never got above it, did it? These lines act as one. Your small triggers are the combination of both. So if that second one doesn't break it through, I don't consider this area broken. And guys, this is kind of a safety tool for brand new users. For your first 10 days, if those trigger lines don't get through, it's okay to wait, right? If the market's going to continue up, it'll continue up. So CJ, I use this as a, once again, price reaches resistance. Not yet. It didn't quite make it. It sure was close, wasn't it? And what you guys are going to find is that as you grow with the software, I want you to ask yourself, if you entered the market at the top of this window where you were able to identify where it's likely to continue, no problem. You had $100 worth of profit to get back to that red line. Some of you will begin to say, well, with that much momentum, I'm willing to take a shot. I'm willing to take a chance. I'll identify my trouble spot. I'll take quick profits right at the line. I'll get to break even as soon as I possibly can. And I know that there's a lot of next-gen traders that are very comfortable with this trade through the study that they've done. My focus is for you guys to kind of work in absolutes for the first 10 trading days, the first 20 trading days. And then it's going to be your ability to recognize a culmination of advantages that opens up opportunity. Does that make sense, guys? Absolutely, George. Smalls are through, area's not quite broken, but it has the potential. Both the small and the large go through. Now I consider support broken. Smalls made it through, but the large did not. An area with the potential to break, but has not broken. And then guys, what are we looking at right now? After the fact, it looks pretty good, doesn't it? And this is a medium probability trade that ultimately you're probably going to end up taking. And Cal, everything is in the moment. So let's come up. Price reaches resistance. Cal, are the small triggers, are the large triggers above or below? And anybody can answer the question. They're below, therefore it's a termination. Next bar prints. Have they gotten above yet? Not yet, right? Still a termination. Still a termination. Now they're starting to break above. Guys, now they're above. And we're into this divergence high. But let's go through it again. Once again, just ignoring termination conditions and identifying windows of opportunity from the highest point of support to the lowest point of support inside of favorable large triggers. High probability trades say that we depend on the idea of a clear path. Chart reading may sometimes let us know when it's okay to take a shot, right? Is everybody comfortable with that? Your ability to recognize a high probability trend trade teaches you to read indicators. Guys, the learning curve for a high probability trade is a pretty fast one. That high probability trend trade teaches you to read your indicators, teaches you to read your charts to discern what's happening in the moment. And this is going to open up the door to the medium probability trade when you identify that one small issue exists. Notice that it doesn't say multiple issues. One small issue exists, the vast majority of your trades. So guys, on this trade right here, what was my one issue? Nope, Cal, we depend on the small and the large working together to gauge momentum. We rely on the small and the large working together to say that an area is broken. But guys, if I had odds favorable momentum, if I had no divergence, if I had strong triggers, if I had a small window of opportunity, Can we say that my one issue was 78.10 not being completely broken? That 78.10 presented a problem for us. Is everybody comfortable with that? Which means that if I've learned to read my indicators and I'm gauging advantages, I can say I'm willing to take this trade and manage assertively, which means that I'll probably take my first profit at this one line that is potentially causing trouble. To determine the A of op, area of opposition? Guys, this is my one issue. I can take it and manage assertively, or I can choose not to take it because I don't have a clear path. The opportunity, Cal. So let's go back to right here. I love this. This is a great picture. We go back it up one. Price reaches this area of support at 77.83, right? How many trigger lines have gone through? Absolutely none. And therefore, this is an area likely to stop the market. So we're going to go through the process of an area that may stop the market, right? No trigger lines through. As the market continues down, my small trigger lines break through with odds favorable momentum. This area has the potential to break. And we don't consider this area broken 100% until both the small and the large get through the area. And if I scroll back to 844, let's scroll back to when that happened and let's see what happened. Didn't have the advantage of a clear path. I get multiple divergences in the same location, gives a management opportunity, and ultimately it gives it one more push with that momentum, and then it pushes back up. There's those divergences in the same location. The trigger lines are starting to roll, and then it comes up. So even though this area broke, divergences in my smaller, faster chart said we probably weren't going down anymore. So Cal, we're just going to use those trigger lines. First, to determine momentum. Second, to determine whether or not an area has broken or not, to give us that advantage of a clear path. Does that help a little bit? Not broken, potential to break, consider it broken. That's okay. So, Cal, price reaches a divergence high. Have the trigger lines broken through that area? Nope. This is a termination condition, Cal. So let's keep it simple for now. Either the area has broken or it hasn't. When will this area be considered broken? When both the small and the large triggers get above it. Until both small and large triggers get through this area, I don't have the advantage of a clear path. Cool. And guys, you can go through and study this, practice this in the moment. This is the one. So if we go back, smalls are through, large are not. This area has the potential to break, but it hasn't yet broken, and ultimately, it doesn't. Absolutely no trigger lines break through. This is an area likely to stop the market. And Cal, you asked, how do I know? Look at this picture right here. I love it when the market does this for me. If I go back to termination conditions, look at this picture from the termination conditions section. Price reached resistance, kind of pulls all the way back to support, retests resistance, and then drops. Price comes close to resistance, all the way back to support, finally hits resistance, and drops. So what we're using is Fibonacci as a key area to determine where the market can stop. We're using our trigger lines to determine whether or not we have that clear path, whether or not we have that momentum. And then we're using a smaller, faster chart to gauge whether or not we have an area where the market is likely to continue. And guys, this is something that it's going to take a few days. It's going to take study. It's going to take practice. It's going to need you to take pictures, to post them in the room, to keep asking these great questions, and then it begins to click. So don't put the pressure on yourself to be perfect in the first day, the first week. Repetition breeds confidence, guys. I promise. The area of opportunity, Cal, rule number 3, right? So Cal, your homework tonight, and anybody that's working on entries, is I want you to go back and study this section. That's okay. We're going to do more today. I'm going to go refill my water real quick, but we're going to do more today. Cal, are you comfortable with momentum? This is usually the easiest for everybody, yeah. And when we talk about a clear path, new users, it means that both sets of triggers are on the other side, that there's nothing in the way. Rather than overthinking it, just say to yourself, have all of my trigger lines gotten above 39.46, guys? Not yet. No clear path. When price reached resistance, that termination condition was good all the way back till price reached support. So guys, in order to have a clear path, those large triggers must get above 39.46, at which point the rules will be met for the clear path. And if we get that clear path, if we maintain odds favorable momentum, well, then we'll look for that area of opportunity. Guys, I'm going to take a few minutes. When I come back, I'm going to look through a couple charts. Cal, I want you to spend some time when people post these high probability trend trades, looking at the entries too. Steal the pictures if they're good. And then, guys, we'll do another couple bar by bars and let you guys play along finding the entries, because I find that repetition is key. That repetition helps an awful lot. I'll be back in just a minute, y'all. All right, y'all, getting back into it. Just based on what we know about termination conditions. Me too, Cal. Price pulled back to support. Were the trigger lines above or below? This is kind of the next way we can begin to use termination conditions, guys. Price pulls all the way back to support and every trigger line is above. It still means that this is an area likely to stop the market. Price pulls all the way back to support. Every trigger line remains above. Once again, this is an area likely to stop the market. It may not be an opportunity for a trade yet for a brand new user, but what it does is it lets you know that it's not time for shorts yet. We still have an area trying to break, but hasn't broken. Guys, I have 1, 2, 3, 4 divergences in the same price range. I have small triggers inside. Do you see how your small chart gives you a little indication that it's not time to go long into this area with the potential to break? It has the potential to break. The small triggers are through. But look at the warning signs coming off of that 5-1, guys. Give me a Y in the room, if that makes sense to you. And what you're witnessing right now is a huge fight between buyers and sellers right at a key area. And this is one of the reasons that we respect Fibonacci as much as we do, guys. Because we're not the only ones that see it. Guys, you have the advantage of seeing it just like these deep pocket institutional traders. 39.46. Look at the up and down. Look at that. Absolutely, Cal. Cal, have you ever traded? I don't know if you have a history of trading. Guys, how many of you have been chewed up? Maybe I should go long. No, maybe I should go short. Maybe I should go long. I think I should go short. By using Nexgen, by seeing these key areas, knowing where these fights are going to happen, these fights between buyers and sellers, guys, look at what happens right at that key area. If you scroll back, you start to see this a lot. You start to see right at these key Fibonacci areas, look at the scramble. Bobby T, when is an area broken? The rules don't change. That's it, both triggers. Isn't it simple? Isn't it easy to speak in absolutes a little bit in the beginning? Either the triggers are through or they're not, right? And guys, look what happens. Multiple divergences in the same price range and the market's pushing down. Big chop, range bound. No rules met. That's the key word that I want you guys to remember. No rules met, no trade, right? Rules met, take the trade. If these are your only two options, guys, rules met or rules not met, you're not going to get chewed up and chop. You're not going to get chewed up hoping that areas break when they haven't. You're not going to jump in at the wrong spots. Either the rules are met or they're not. All right, guys, I'm going to go to the top of the room real quick, and I'm going to click on some of the charts from this morning. And we're going to see what you guys were doing today. All right, coming down, coming down, coming down. Let's see. Guys, I posted this picture in the room this morning. This was the first one. This is the gap theory, guys. This is when price accelerates away from the large triggers. When price really moves away from those large triggers fast, I've got a picture that explains it. This is a pattern, guys. This isn't a trade to take. This is a pattern. If price pulls away from synthetic triggers too fast and too far into a Fibonacci area, it typically snaps back to those triggers. I took this picture this morning. Where'd it go? Here's the before picture. Price accelerates all the way to this mid-band, right? I have odds favorable momentum. Everything's pointing down. Guys, look at the gap back to the large triggers. That reversal bar, there is a full bar's worth of room to get back to those large triggers. And if you tried to take that trade against that gap, you got run right over, didn't you? Guys, this is a picture that you can put into your spreadsheet for termination conditions. This is something that happens every day. Every day you're going to see that gap theory. Every day, if you respect it, it's going to keep you from getting into trades when you've lost that advantage. All right, Gary, let's see what you did. Guys, I want you to notice Gary's charts. When Gary posts a chart, he posts a checklist with this chart. He habitually puts his rules on a chart to make sure that he's following them. Even when the chart doesn't come up, it's loading kind of slow here. There we go. Smalls trade, 50-50. Small's outside of large. He said the small window is now large. Yep, your entry was right here. If you were going to take this trade, that was your entry. This becomes your management opportunity, Gary. Good read. Bobby T, I think you and I took the same trade. Pivot stop out here typically results in a pivot stop out here. You get in, you make quick money. Out pretty quick there, Bobby. Not trading from an area either. How did you know it was going to go there? And I ask, Bobby, because you're outside of the window, right? It looked good. I like it. I actually got in. I want to say I was in at 33.50, just below resistance, that lowest area, with the understanding that it may push up to that pivot stop out. Stops kept me safe. I don't know if I have a picture of my trade or not. I don't. Entered at the areas inside. Try to stay consistent on that. Took $100 on the first one. The reversal bar was up there. Not yet, it wasn't. And do you see how that works, Bobby? Everything's going up, right? All these bars are going up. If you waited for the reversal bar, you would have been back down here at the area of resistance inside. I love a pivot stop out after a pivot stop out, but trying to be consistent in the beginning, just making sure. I love the trade. I think you could have gotten a lot more out of it, for sure. No reason to manage until this divergence printed. I think I was in at 33.50, took my first one at 31.50, and then when third divergence in the same location printed, I was out break even +1. Great trade. It's a good read. All right, I'm going to scroll back up to the top. Let's see who's next. Gary, let's see what you did. Gary, 50-50 trade, no divergence, beautiful pullback. Second guessing yourself. Guys, this is going to happen until you trust your rules wholeheartedly. You're going to second guess yourself because you're processing, right? Is this right? Am I looking at the right thing? Is this what I'm looking for? Oh my gosh. And by the time you figure it out, it's gone. This is why you take pictures. This is why you study. This is why you go back historically. Because what happens is when you miss the easy ones, you'll talk yourself into taking the hard ones. Remember we said on a 50-50, it's okay to demand that your smaller chart is perfect. No divergence, strong triggers, tiny window of opportunity. This is picture perfect. This is everything I hope for on an area with the potential to break but hasn't broken. This is why I encourage you guys to keep it simple in the beginning. Because if you keep it simple, there's less things for you to think about. There's less scenarios where you talk yourself out of stuff. It becomes very black and white. Either my rules are met or they're not. NG time, 50-50, no divergence, perfect entry, right? Quick profits. Well, you moved your stop. In at 03, 9 ticks later. Did you have any reason to move your stop, NG? Had anything changed in that trade? On 50-50, smalls need to be outside of the large, like that? Absolutely. Oh, trailing auto, NG? Right on. So, Gary, when we look at yours, smalls outside of the large? Absolutely. What does that mean for us, Bobby? And let's go back to that picture that I shared earlier. On a 50-50, no divergence, right? No divergence is perfect. Strong triggers is perfect. Small window of opportunity. Man, that's how you get into a 50-50. And if you go back and you look at Gary's picture, this is a beautiful example of a 50-50 trade, right? It does help. Gary, you had a rock star trade there, my friend. Notice how Gary uses a checklist every time, right? Guys, it's not my job to tell you what to do. It's my job to help you read indicators. I'm going to share my checklist with you guys. I'm going to put it in the class too. These are my conditions for entry. It's simple, it's fewer moving parts, and for me, it helps keep me focused on the absolute best and the best. Guys, the more options I give myself, the more charts that I look at, the more scenarios that I'm willing to entertain for an entry, the more my brain has to go through. And what I find is I'll talk myself out of stuff that I should have been in, and I'll talk myself into stuff that maybe I should have stayed out of. Everybody's different, though. That's how my brain works. It doesn't mean that Gary's wrong for having this many rules. This would kill me. But it works great for Gary, and he's doing wonderful with it. And guys, that's actually all of our pictures today. Slow market day, I suppose. What do we see now, guys? This is the S&P. Small triggers above the large triggers. Large triggers are wide. Zeba, where is it? Did I miss it? Guys, I miss pictures sometimes. It's never intentional. I never ever look at a picture and say, you know what? Oh, I missed Sophia's too. Guys, I missed a whole section. I thought that seemed like a small amount. Here we go, Zeba. My apologies. Smalls above the large are wide, they're angled in the direction of the trend. You get in at the top of the window. Your stop stays safe. And Zeba, once you get the reversal bar, you can take advantage of it. So Zeba, when both targets were hit, this number changed to negative 750. Is that what you're saying? Am I reading that right? Okay. So Zeba, that means that you lost close to $1,000 and you just won a little bit of it back, but overall, you're still down. Is that your second picture? Why are you down 720? Because Zeba, your simulator, did you have losers before this? Here it says that you made, I know, because this is for the day, not for the trade. So Zeba, if you're down $1,000 already, that's 100, and you make $200, that number is still going to show you down negative 800 because you're in negative equity for the day. You've had enough losers that you're not positive. So where's the $1,000 in losses before the winner? Why didn't you post those in class? Don't you suppose there might be a lot of great information on a loser? And guys, I notice this stuff all the time. People love to show me winners, right? They love to show me that they can make money. Show them to me anyway, Zeba. Show me the chart. Show me the annotation. All right. How's that playing going to help you out? Zeba, if you have a dressage competition and you practice for it by barrel racing, how are you going to perform in the competition? All right. Stop movement. Awesome. But Zeba, isn't it difficult to move targets and stops if you're not in the right trade? Because everything begins to go against you. It's easier to practice management. If you're not getting your entries, your management doesn't mean anything. So focus on your entries, and then, yeah, it happened, it's done, it's over. But guys, focus on your entries and learn to manage good entries instead of trying to manage poor entries. It'll make your life easier, I promise. You can do whatever you want, guys. Can't stress this enough. Not the boss of anybody. But I've made all the mistakes. Odds favorable momentum, and Safia, you had smalls through and the large were not. Get this up here. You tried to take a momentum style entry. No, you're always forgiven, guys. I do. I remember everything. But guys, it really is. It is valuable. If I'd say something and it hurts a little bit, I apologize. My intention is never to hurt or to anger or to confuse anybody. But if I say something, it's because you guys are telling me that you want to trade, and I'm trying to put you on that best path, that fastest path, that path of least resistance. So Zeba, I absolutely think that managing a trade is important. But I think that when you take great entries, your management lessons are easier to implement. Your management strategy is easier to implement from an entry at resistance inside of favorable large triggers than it is from jumping in below everything, right? Safia broke your rules, got stopped out, and then took the correct trade and made money, right? First trade, didn't wait for the areas inside. And this becomes difficult to manage, right? Because your stop has to go way up here. But if you focus on those great entries, man, that management lesson comes in beautifully. There's a reason I ask you guys to focus on entries for a few days, because great entries create manageable trades, guys. Let's see where I'm at. That was Safia. Gary. Whoops. Really blew that one up, huh? 50-50 trade. Divergence Prince. Should have waited for market flow. Would have saved you, huh? Guys, remember, an area with the potential to break, a loss of momentum. It's right at an area of resistance inside of favorable large triggers. 50-50 trades with divergence use market flow signal. Gary identified on his checklist that he broke his rule, right? No surprise in his results. Safia, it looked like you lost the first one, did you not? Am I reading that wrong? There's your entry. Oh, you got quick profits and then gave a couple back. Okay, you took quick profits on the way down. It's all right, Gary. Stopped out for a tick or two. And then that re-entry is beautiful. Right on. Yeah. Okay, I see what you did. Does winning change that you broke the rules? How often is that one going to work? And that's the point that I try to make, guys. Get consistent, right? Always practice the correct trades. Get your brain in that mindset. I'm going to follow rules no matter what. Because the rules, once you trust them, you understand that they provide you an advantage. And Safia, I get lucky every now and then too. Gosh, the second one is perfect. Safia, the second one I could teach a class on, couldn't I? Odds favorable. The area hasn't broken, but it has the potential to break. No divergence. Small's outside of the large. Small window of opportunity. This is a picture-perfect, absolutely wonderful 50-50 entry. You take quick profits on the first and beautiful on the second. I love it. And Safia, could you have entered again right here? Small's below the large, larger wide, angled in the direction of the trend. No termination conditions. Look at that pullback to the mid-band inside of favorable large triggers. And guys, this is amazing. It is moving fast. When you start to get comfortable with these, you're going to make money from this mid-band to that exit, and then you can make money again from this mid-band to that fib. It's hard to keep up in the beginning. And that's another reason why it's so important to focus on that checklist, to make sure that you're comfortable with what you're seeing, and that repetition builds confidence. Guys, you're doing great. I can't stress that enough. Because I find a flaw in your chart, it doesn't mean that you're doing stuff wrong. It means that you're on the perfect path. And every time you make a mistake, guys, it's like going to the gym. Failure creates strength. Does anybody work out here? Is anyone familiar with that term, failure? It has such a negative connotation, doesn't it? Guys, failure is how you get strong. Odds favorable, no divergence, 50-50, perfect entry, absolutely beautiful. NG time, what an amazing trade. Guys, I spent years working out, spent years as a personal trainer, and I can tell you that the only time I got stronger is when I failed. Putting the body under duress makes it stronger. Making a mistake as a day trader gives you a platform from which to grow. And I love it. NG time, I love everything about this trade. Once again, no divergence, strong triggers, small window of opportunity. Perfect entry on a 50-50 trade. You guys are doing great here. Safia, I think that's the one that I just saw on yours. George T asking, what's my take on this? Two divergence, he usually doesn't take it. Looking for a long, George? Odds favorable. I'm trying to see what charts are what. That's your 21. 21 says don't do it. George, I'll look at where the triggers are in relationship to the large, where the small are in relationship to the large. So if I've got this much momentum, maybe coming from a good bottom, and I'm coming through and I'm looking, notice how this pivot stop out with the small trigger still outside, didn't your entry come right at that pivot stop out at the area inside? I love this look. Bobby T took one this morning just like it going the other direction. If my 13.2 supports it enough, if my small triggers stay outside, I'm pretty comfortable with this entry personally. But it takes a little bit of time, right? And I think your management is great. Once that third divergence prints, GTFO, George. That's my rule. When that third divergence prints, I'm done. I don't hope anymore. The trade I took this morning was the exact same trade to the downside. 2 divergences, pivot stop out. Took my entry, stop kept me safe. I took quick profits, third divergence, I exited the trade. I did the exact same trade as you, George, just going the other direction this morning. And it wasn't a barn burner. I think I made $125 on it. Love it. There's that same one, 50-50. Everything says up. This one's coming from a great termination condition. 2 divergences, pushes it a little bit lower. Stop, stay where they shouldn't go, Earl. Beautiful. Quick profits at the trouble spot. Second profits. All day long, guys. All day long. In Safia, the market repeats itself all day. The market's going to repeat itself every day. Guys, all you're doing is you're learning patterns, right? Oh my gosh. Smalls above the large, 50-50. Not a clear path, but 50-50. Odds favorable. And look at this entry. Guys, can we agree as a class that great entries make manageable trades? Safia, this is beautiful. Great entries make manageable trades. Great entries reduce risk. Great entries increase profit. And guys, great entries on medium probability trades give you more room back to the trouble spot. Great job, Safia. Great job, everybody. Termination. No triggers through. Does everybody... We're comfortable, right? Price reached resistance. Absolutely no trigger lines broke through. Who's going to show me a long trade from right there? Anybody? Is anybody allowing themselves to be new? Is anybody willing to say, hey, Mark, guess what? I broke a rule. And when I broke a rule, I paid the price. Anybody take that trade? Guys, I took this trade every time it set up when I was a brand new user. Because I was so infatuated with an area inside of favorable large triggers that I never gave any consideration to whether or not I'd reach the termination condition. Guys, this was my problem. More often than not, I took this trade. And this is what I did. I'm going to go through the path. I took the picture. And watch how I annotated my charts, guys. I put strong triggers. I put area for entry. Darn heck. Whatever I could think of. And guys, I took this picture and I posted it in the room. And at the time, my older brother was running the room. John Novak, the creator of the software, made himself available not only to me, but to everybody, to give feedback every day. And he pulls up the picture, just like I pull up your pictures. And he goes, hey, Mark, you're trading with the trend. Good job, right? The background's green. We're only looking for longs. Good job. Mark, you had odds favorable momentum. Those strong triggers look amazing. There's a lot of momentum going into this trade. But Mark, I noticed that you didn't write anything about termination conditions. And the one thing that I want to point out to you is that price reached resistance. And when it did, absolutely none of your trigger lines broke through. Mark, what that does for you is it gives you an opportunity to recognize that your clear path has gone away. And this becomes a very low probability scenario. And guys, I had to take that feedback from my brother about 1,000 times before I finally believed him. And then I would share that picture into screencast and upload it to that screencast cloud. And because I didn't want to make the same mistake over and over and over again, I'd come to my tracking sheet and I would post that picture. I would hyperlink it directly into my spreadsheet. And I'd put broke rules lost. Just to reinforce a little bit. Hey, I broke my rules. I lost the trade. I'm going to try not to break those rules again. And then what I would do, guys, is I would start annotating pictures right about here. And my annotation process turned into that. Before I pull the trigger, I'm going to go through those rules one more time, and I'm going to take a pre-trade and I'm going to annotate my charts and make sure that I'm following my rules. And if I'm not pulling the trigger. Guys, it's hard to do. The hardest thing to do is to do nothing when your rules aren't met. Claire, termination condition. Termination condition. Whew. I know you like this one, Claire. That's a tough one. Everything is still up. That's aggressive. I think. I know you've got an amazing plan because those large triggers are absolutely screaming and everything is up. And Claire says, you know what? From such a great termination condition, when the small triggers come down with momentum, I'll take a little stab back to the mid-band. It's a beautiful trade. This one terrifies me, Claire. That's my heartburn trade. I can't take it. But you absolutely nailed it. Beautiful. All right, Justin, this was your only trade from yesterday, right? Can I help you understand the termination condition? Let's look at it. The answer is yes. I would be more than happy to. So let's go through. Is the market coming from a good top or bottom? Did we have a termination condition up top, Justin? Something reversed this market? I like it. Do we have odds favorable momentum? Is that your best look? If we go back and we look at the momentum section, Justin, I want you to see this. Here's your best of the best, right? See where those smalls return? Justin, that's kind of where we're losing the giddy up. And that's where you're at here. Those smalls have already started to return and they're working their way inside. So what do we see on this side, Justin? We see a Fibonacci, right? The smalls have broken, the large are not. So one thing that I have is I have potential to break, but it hasn't broken. Is that the top? Right on. Right to that divergence high. Beautiful termination condition. Full reversal. I love it. Let's do this real quick. We're going to blow this one up big for posterity. Especially since the market just traded into a termination condition. All right, so I'm going to pull this one up, and I'm going to take a picture of the picture real quick. That's not it. I'm not sure how that happened. I took the wrong picture. All right. You see the fib, Justin? No worries. This is the first thing. We're going to start on the 13-2. Not odds favorable momentum. The smalls are working their way back inside of the large. The small are through, but the large are not. So we can identify this as, that's okay. You're going to break rules, Joel. Justin, do you see how it has the potential to break, but it hasn't broken? And I don't have screaming momentum to aid in that potential, right? So that's our 13.2 read. That's okay. So let's do the other side of it. And we're just going to bring this straight from the manual, okay? One, two, three divergence, right? We all do. Three divergence may terminate. Comfortable with that one, Justin? Yeah, so before your entry, not only were you losing momentum on the 13.2, you had 3 losses of momentum and a trend change on your 5.1. And that happens sometimes. In the moment, you're not going to, right? And you had no areas inside of triggers, and that just pushed right back up. It pushed all the way up to the very top here. And look what you did. You're like, I'm going to get in, I'm going to get in, I'm going to get in. How many of those losers are you willing to take without momentum? Because, guys, I've seen people go short all the way up until they've blown out their account. There's a gentleman that John knew a long time ago when the S&P cratered. He bought, because he said there's absolutely no way I could be wrong. Even though my indicators say the market's not going back down yet, there's no way I could possibly be wrong. So, Justin, you gave away a lot of advantage in momentum, right? You didn't have the clearest path. All right, so now are you ready for the second half of that, Justin? When all of this says just hold it, just give it a minute, right? And that's what this is telling you. Do you recognize that? And it's trying to figure out what it's going to do. At least let your small triggers go the other direction. Here where they pulled back to the mid-band inside of favorable large triggers, I want to say I took this short right here and took quick profits and got out yesterday. And then it just started getting wonky and the large triggers rolled and things just really started losing advantages. And it was a weird moment in the market. But the small chart gave you every indication you needed that it was time to be patient. And sometimes you just got to let it go away, right? You just got to say, all right, that's not my trade. My rules aren't met. I'm giving away advantages here. And it ultimately makes it. And it sucks in the beginning to watch it make it because you're like, I knew it was going down. But there's not a lot to do there. Actually, Justin, yeah. I actually think I took a trade from over here and took it back down to the large triggers, a little bit of chart reading. So yeah, focus on the complete package. And that's okay. In the beginning, you're not gonna. How could you? How could you be new and see everything all at once? So you focus on the best of the best and commit to that checklist, right? And it helps keep you focused on that. And you're going to do exactly what happened here, right? That's a great bottom. That's a full reversal. That's odds favorable momentum. That was your potential trade, Joel. It didn't quite make it. The areas weren't inside. And then when we get back up here, you took the trade because you got bored, didn't you, Joel? I've done it. Once again, guys, I'm a big fan of honesty in this room. I'm going to put my hand up. I've taken a trade because I just haven't taken a trade in a while. I've fabricated a trade. I begin to ignore disadvantages because I just want to be in a trade because I start feeling that I'm missing something, right? It's a reason. That's not even an excuse. So guys, let's talk about how do we fix that? It's very fixable, but it takes a little bit of discipline on your part. I'm going to give you guys this right here, guys. This is an example of how to write the most simple, basic, focused, every advantage plan for a brand new user. I want you to use the phrase my trade is. My trade is the high probability trend trade. And all you're doing is defining your entry point. Why? Because great entries create manageable trades. Write it down. Put it on a coffee mug. Open an Etsy store. I'd buy a puzzle that had that on it. My trade is the high probability trend trade. And to enter the trade, the conditions of the checklist must be met. Guys, I've got to study so I can understand what each of these looks like, right? So that I can make sure that it's met. I'm going to fudge it up a few times in the beginning because I'm brand new. Totally cool. But I'm going to be able to get help because that guy Mark is sitting in a room 15 hours every week, and the only thing he wants to do is look at my charts and help me be better. Did they, Sam? Last couple of days you were trading in determination conditions and it didn't work out for you? So what you're saying is you took pictures, you put them into a spreadsheet, you went back and studied them, and you noticed a pattern? And now you can correct the pattern, right? Sam, you and I were separated at birth. That's exactly what I did. I traded in determination conditions like somebody was writing me a check to do it. And I had to go back and study. Guys, the entry conditions right here on this checklist are a high probability trend trade entry conditions. This is a trade that typically wins 70 to 80% of the time. I encourage anybody in this room to give me 5 days consistently using nothing but this checklist and show me the results. If you're not winning more than you're losing, try it. See what happens. You're going to take a lot of pictures, guys. Pictures of your longs, pictures of your shorts, pictures of the rules met. Study. Scroll back. Steal pictures from class. Guys, when I say, wow, Sam, this is a high probability trend trade, absolutely beautiful, every one of you should be stealing that picture. Here we go. If I say, Gary, this is the most beautiful 50-50 entry I've ever seen in my life, every one of you needs to be copying that screencast address and go into your spreadsheet under Trader Looks and watch this. Here's a link, right? I'm going to put it in there. And I'm going to give credit to Gary because that's me. Whoops. That wasn't quite credit. Let's try this again. I'm going to turn it into a hyperlink. My screen is going wacky. There we go. We'll do it here. Gary's perfect 50-50 setup. I like to give you guys credit. You don't have to give someone credit. It doesn't matter. But what I'm doing is I can come back and look at this every day, right? Every day I can look at it. I can say, well, yeah, that is the perfect. That's exactly what a perfect 50-50 look is. But initially, all I'm focusing on is the highest probability. Here's the pictures. Let's see what this one looks like straight from Strong Triggers. And guys, this is Gary again. Gary, look at how simple your checklist used to be. Smalls below the large are wide, they're angled in the direction of the trend. Actually, that might have been Jose. No termination conditions. There's a beautiful entry at resistance inside of favorable large triggers. Guys, this is from September 22, contract of crude, which means this is probably from October of last year. And the pattern is exactly the same. Can't print it? Why would you want to print it in this digital age, Cal? Cal, just take it and put it on your desktop. Read it every morning. Write your own. Open up Microsoft. I mean, you can print it. Go to a printer, but you have to save it first, right? So you have to save it. So if you take that example from class, Cal, you still have to go through it, and you have to save it, and you have to make it yours so that your printer can find it. It can't find it from the middle of the internet. It's got to be saved onto your computer. And then guys, here is the second half, right? If you spend a couple weeks focusing on entries, it's hard to manage a trade if you can't read charts yet, right? It's hard to manage a trade if you don't know when you're in trouble. Ziba, thank you for that phrase yesterday. Yesterday, Ziba said, I don't know when I'm in trouble and I don't know when I'm not in trouble. That makes management difficult, very difficult. So why not keep it mechanical? Trade 2 contracts. Have your predetermined risk. Know where you're moving your stops, and don't let emotion take over on it, guys. Keep it mechanical. And if you allow this to be your path for the first 30 days, guys, this simple plan, you're going to understand how to read your charts. You're going to understand fluently where the market is likely to continue, likely to stop, and likely to go. And the idea is that you build a foundation capable of winning consistently as you expand your knowledge base through repetition. Guys, if you take this trade, and this is your only trade, you can also save it from Snagit. That's true. Here, I can take a picture of it. Maybe that'll help. I find pictures don't always print as well, though. Keep it simple. Follow the rules. Guys, that's your path. Is everybody comfortable with that? I know we all want to be rich on day 2, but let's learn how to read charts. Termination condition keeps us out of the long, doesn't it? Termination condition keeps us from thinking that there's a short after a termination condition, and now the market's trying to figure things out. Once again, price reaches resistance, pulls all the way back to support, the triggers don't follow, it's right into resistance, a divergence high, and one-to-ones. Guys, does this scenario right here look anything like, whoops, where's that picture? There it is. Look anything like this picture, guys? What do you think? Except instead of that second area of resistance, we have one-to-ones. Looks pretty similar, doesn't it? Isn't that amazing? The market repeats itself, guys. And it's that repetition, it's that recognition that helps us understand when we have an advantage. It also helps us understand when that advantage has gone away. Nothing to do in the S&P right now. We're trading directly into termination conditions. Guys, nothing to do in crude oil right now. Look at this area of resistance. Where are your small triggers? Where are your large triggers? I can't go short with a red background, right? Ziba, great job. When price reached support here, full bar to get back to those trigger lines, right? Ziba, that was your clue not to take that short. Beautiful, great chart reading. Ah, I get giddy when you guys do this. That's what you call applying a lesson. Did anybody go short in the middle of that vacuum? You want to talk about it? Why was this trade less likely to work? Because when price accelerates away from the large triggers and there's a full bar's room to get back to them, anything in this vacuum typically gets run over as it goes up to the trigger. Ziba, you took the short? It was a termination? Okay. Guys, I want you to take this short in the beginning, and then I want you to post the picture and let's talk about it. No, Ziba, that was great recognition. And if you didn't take the short, even better execution. Gary, terminations for days, right? That pullback's tempting. But rule number 1's not met. Rule number 2's not met. That's all I can do, guys. I don't control the market. I can't make it go up and down. How to disable? Absolutely. Gary's charts are hard to see. Because Gary has so many charts, they're a little bit smaller. If you click on it, Ziba, if you steal his link, you can click on it and make it bigger. But all you really need to focus on are these two, right? 13.2, 5.1. Is that a little easier to see like that? Cool. All right, Jason, you're welcome. So Jason, right-click on your 13.2. And guys, this is for everybody. How do we get to just the triggers? Go down to Templates and click Load. And pick your 2 triggers only. And I'll give you guys a picture so you have a study tool. All right, and Jason, there's a picture for you too. And guys, a picture for everybody. Put it in your spreadsheet and call it study tip. And then once I click OK, all those trigger lines go away. And I can start circling tails, right? I can start circling tails and just getting myself in a habit of recognizing odds favorable momentum and no termination conditions. And guys, if this is all that I do initially, I can still come back and look at my charts and see if those circles fit the rules, even without termination conditions, right? And then Jason, the exact same way to get them back on. Right-click, Templates, Load. This is your 13.2 Renko chart, 2023. Click OK. And then you're solid. But if all you're focused on is entries right now, guys, watch this. If all you're focused on is entries, based on the 2 charts, was this a pullback to resistance inside of favorable large triggers? Odds favorable, no termination conditions because we took them away, right? Was this a pullback to areas inside of favorable large triggers? Guys, wire in, yes or no? If it's yes, can't we take a picture? Save it, right? Guys, isn't this a beautiful look for an entry? So why not go to screencast and take that picture? There it is. It took a second to come up. Go to your spreadsheet, guys. And let's call it short rules met. And then let's go back to the market. Odds favorable, no termination conditions. Guys, did this market pull back to an area of support inside of favorable large triggers? What do you think? No, Ziba? Odds favorable, no terminations. There's your pullback directly to an area of support inside of favorable large triggers. Absolutely. So take the picture, right? Guys, you can do this after the market. You don't have to be in a live market to begin to recognize the looks. Use the call out. Write your rules on it. And then save it. And go back and study it. Cal, this is an area of support, mid-band, inside of favorable large triggers. This is a picture-perfect trade. Everything about it. Odds favorable, no termination conditions. The reversal bar begins to pull back. It doesn't make it. It gives us another reversal bar. And that market pulls all the way back to a mid-band, right inside of favorable large triggers. It's beautiful. Thing of beauty. So share it to screencast. How what, Safia? How am I so darn charming while being so humble? Let's look. Great question. Hoping nobody would catch that. All right. So guys, rule number one, let's walk through it together. Odds favorable momentum. Is everybody agree that we have a market likely to continue in the direction of the trend? Do you see it? All right. No termination conditions, right? Is everybody comfortable with the fact that this market has not reached an area likely to stop it? All right, so here's my reversal bar. It's the top of this bar. So far, so good? This is the top of my triggers. This is the bottom of my triggers. Do you guys see it? Actually, the bottom of the triggers are even lower. This is, whoops. This is my highest point of support. This is my lowest point of support. There's the area where the market is likely to continue. Is everybody comfortable with that? So Cal, the rules say that I'm going to put a limit order at the top of the window because that's where it's most likely to continue. Because with odds favorable momentum, because with no termination conditions, with a pullback on the 5-1, these areas that fall inside of favorable large triggers are the most likely spot. Why? Because it repeats itself every day. Guys, do me a favor. When you say why, help me out with why what? So right here at the top of that window, guys, all of that is in the future. I don't care about that. Let's do it like this. Why here? Because the rules say, Cal, that the market is most likely to continue from an area inside of favorable large triggers. And because of the study that you're going to do over and over, eventually you're going to believe it rather than question it. It's okay to question it now. So a limit order goes at the top of the window because of the momentum, because nothing is in the way. I don't expect the market to continue down, but rather continue up from areas. So what happens is with all that momentum, without those termination conditions, with these areas inside, that's where it's most likely to happen, guys. So I say absolutely. That's a rules-med entry. Is everybody comfortable with that? Let's scroll back. So Cal, odds favorable momentum, yes? And anybody? No termination conditions? Remember, guys, we're taking away areas to keep it simple so we can focus on the best of the best entry. So at the time of my reversal bar, this is the top of my triggers. This is the bottom of my triggers. This is my highest point of resistance. This is my lowest point of resistance. That's not quite inside yet, but if you got in early, that's okay. It still goes down. But do you see how the market bounced right off of that mid-band, Cal? Inside of favorable large triggers? Guys, you're not going to believe it or trust it on day one, which is why, whoops, making a mess of things here. Which is why when you downloaded the software, when you became a demo user, we gave you this tracking sheet, guys. Every time you take a trade, you can track what you do. Did you guys hear Sam when he said, I noticed that I kept trading in determination conditions and I was losing, so I had to fix that? It's because Sam tracked every one of his trades and he went back and studied them. And he said, oh my gosh, this is a pattern that's costing me money. And then Cal, this is what you're going to do to understand the why. Every time you see those rules met, every time you watch that market come from an area inside of favorable large triggers and continue with the trend, you're going to take a picture and you're going to put it into your trade setups. Guys, by the end of the first week, you should have no less than 30 or 40 pictures of high probability trend trades. And if you don't have them, this third page, guys, here's 70 examples. So Cal, you're going to develop trust. You can do that. I have no doubts. Watch this. So what I'm going to do is I'm going to click the first 10 links. So Cal, check it out. Odds favorable, no termination condition. The market continues from an area of resistance inside of favorable large triggers. Pretty cool, right? Here's the next one. Odds favorable, no termination conditions. Market continues from an area of resistance inside of favorable large triggers. Here's another one. Odds favorable. The chart even looks different, but the patterns are the same. No terminations. Market continues from an area inside of favorable large triggers. So Cal, don't you think that if you click through every one of those links on the spreadsheet, odds favorable, no terminations, pull back to an area inside of favorable large triggers, doesn't it stand to reason that if you burn this look into your brain over and over, you're going to start to trust it, right? It happens sometimes, Sal. Or Sam, excuse me. I put your names together, guys. So guys, let's have an honest moment real quick in the class before I take a quick break. How many of you have clicked through every one of those links so that you can begin to become comfortable with what your best case scenario looks like? D, you haven't? I didn't in the beginning. You didn't. So guys, this is, here we go. Here goes my soapbox. If you want to be great at this look, why wouldn't you? Why wouldn't you take 20 minutes out of your life to look at 70 examples of beautiful high probability trend trades? Because I've said to you, hey, here's your best of the best. Study it. But we feel compelled not to, right? Because it feels like work. I know I did. That's why I didn't do it, guys. My hand is raised all the way up to the ceiling right now. I skipped out on the path. Cal, you can look in your Nexgen study picks, and it's there. Or I can give you a link to it right here. There's your link right above you. Hell, guys, I'll give you mine. Here's the one that belongs to me. And guys, this one has about 100 examples of high probability trend trades, right? That's the one that you can get through John Novak. Guys, I've got 104 pictures on mine. I just put it in the room for you. So click on it, drag it over to your desktop, and save that thing, guys. 104 examples of high probability trend trades to help make you a better trader. And look at this. On the one that I just gave you, there's some management stuff. There's that very mechanical management approach. Guys, there's different chart reading things. There's termination conditions. It's difficult sometimes to want to work. It really is. Guys, I've got almost 3,500 pictures in my library. This library is only 4 months old. 3,500 pictures. Study these pictures and start taking them, right? Start stealing them, guys. Eventually, this stuff becomes second nature, doesn't it? All right, guys, I have no idea if there's divergence there, or I'm sorry, resistance there, because I took it off. Do I have odds favorable momentum? Yes or no, guys? And on this chart, do I have no termination conditions? Yes or no, guys? Did I get a pullback to support inside of favorable large triggers? And I'll be damned, is that market heading up right now, guys? It's just patterns. You've got to study these patterns enough to make you comfortable with recognizing it in the moment, guys. The more time you invest into studying these patterns, the easier it becomes. Had resistance, didn't it? So even though, can't we still start working on the best of the best entries? And if you learn to be able to get into the market right here, well, then you'll be able to say, well, that was a termination condition. This wasn't a high probability trend trade, but look how I nailed that entry. Thank you, study time. Does that make sense, guys? That's my only hope for you guys right now, is that you can identify this area inside of favorable large triggers and say, when the rules are met, that's my best chance of success. Guys, if you got into this trade at 78.18, you're already $100 richer and break even. D, do you have Microsoft Excel? All right, so what you may need to do, guys, let's go through the process of getting it. I'll have John update this one. If from this link, exactly, Sam, you didn't take it because it was a termination condition, right? Perfect. But guys, the point that I was making, if I take everything off of there, is that I want you to be able to find your entries, guys. I want you to be able to find that best of the best spot where the market is likely to continue. Win, lose, or draw. I want you to find that best spot, and I want you to take pictures of it. Sam, you had a termination condition there. Everybody did. But guys, can't we all agree collectively that this picture right here would be an amazing study tool for you to recognize where the market is likely to continue? Even if the rules weren't met, doesn't this process teach you to identify the best of the best spot? And then you start working through the rest of it. Then you start working through making sure that there's nothing in the way. But when you identify this spot, everything works itself out. All right, Zeba, are you ready for the Sunday school answer here? All right, here's our chart. I love this, guys. This is a great, you want to know how to stay out of trouble? Ziba, if the background on your 13.2 is green, you should, no, don't be. Ziba, I argued with my brother for 2 days straight about going long and short because it made no sense to me. If nothing else, you and I are kindred spirits here. If the background is green, if the momentum is up, we're looking to buy the market, right? Because we want to go long. So long, whoops, drunk fingers. Long is buy. Green background, right? If it's red, if the momentum is down, we want to sell because sell is short. If I buy, Ziba, does it matter if everything is green and everything's going up on your 13.2? What direction are you trading? You're trading up, right? You're trading long. So, and I think I know exactly what you're saying. You're saying, but Mark, the market's coming down, I should be going short, right? And that's where the confusion clicks? Exactly. Ziba, what direction is the overall trend of the market? Let's talk through it. What direction is the momentum? What direction are all of your trigger lines going? Perfect. What direction is the color? What direction is the market trending on your 5-1? Long. What direction are all of your trigger lines going? Up, right? So you have to think through this process a little bit. What is this down doing for you, Ziba? What are these few small red bars doing for you? Nothing. They're just getting you back to your entry, right? So we rely on those couple red bars when everything says up to buy the market because we're always going to go with the overall trend of the market. This isn't a short. This is a pullback. So what you're doing is that your brain is equating, yeah, well, don't ignore them. You're going to use them to identify your area. But what you're equating right now, I think, and tell me if I'm wrong, is you're equating a trade with what direction the bars are going, right? So in your head, you're saying long, short, long, short, long, short, long, short, long, short. Exactly. But it's not, is it? So watch this. I love it. I love these questions because everybody thinks differently, right? If the overall trend is up, guys, these bars are with the trend. Are you with me, Ziba? All of these bars are trading with the trend, with the direction. So I'm going to do this, and I'm going to use the language from the rules. We will buy a pullback. And a pullback is a small retracement in price. And here's the kicker here. Counter, oops. It stopped. Here we go. Counter to the underlying trend. So in an uptrend, we rely on a small down push to get us to an entry. So Ziba, that small retracement in price counter to the underlying trend isn't a trade, which means that it's neither long nor short. Because long means buy and short means sell. This small retracement in price is exactly what we need so that we can get to our buy. Because the market is moving up, the momentum is moving up, and everything says up. So a small retracement in an uptrend gets us to our buy location. Does that help a little bit? I love that question because, guys, that's the weirdest concept ever for some people. So that little bit of down is just our retracement, right? Absolutely. It's just that tiny little push when everything says up. Once again, it's that tiny little push when everything says up so that we can get back to a spot to buy. So guys, did it do it again? Cal, are you starting to see how patterns repeat themselves? Isn't this amazing, guys? Odds favorable momentum. Look at the steam behind this move. And look how that tiny retracement pulls right back to an area of support inside of favorable large triggers. Cal, this is how we're going to develop trust, my friend. And for the rest of you that are brand new, this is how we're going to develop trust. Circle those tails, guys. Do your homework. What did this one do? Let's see. A little bit of down there. Egads and little fishes, guys. There is a pullback directly to support inside of favorable large triggers. It happened again. How about this one at 932? You guys see what I'm doing here? All I'm doing is creating confidence through repetition. Seeing this, look, so many stinking times that I believe it. And guys, I don't want you to trust me. I want you to work your asses off to prove that I'm wrong. Because if you do, you sure are going to understand these looks. If you say, you know what, Mark is absolutely, positively, without question, full of crap, and I'm pretty sure he kicks puppies, follow this checklist. Go back, scroll back 10 days. Don't even trade the live market. Scroll back 10 days. Joel, have a great day, bud. And make sure that the rules are met and show me 10 days worth of trades where the rules are met, and we'll talk about each of them. And let's see how our percentage turns out. Is anybody up for the challenge? Everybody tells me that they are, but then they forget that they're human. Why? Well, 10 days of historical. I don't do it 3 days in a row. Guys, everybody tells me that they'll do it. No, don't promise, Zeba, because you're human and you might make a mistake. And I don't want you to feel like you broke a promise to me. How about if you say, I'm going to try my damnedest. I'm going to try hard to make sure that I always follow this checklist. I'm going to go back and study it when there's no pressure of failure, like we did. And all I want to see, guys, all I want to see is pictures. All I want to see is the pictures of your entries. And I want you to write on that chart, my rules were met. I took a trade. And all you're doing is identifying entries. And then eventually, these entries turn into management. It's a process. You're building a foundation. Odds favorable, right? And then once you have odds favorable, you're building that foundation of being able to identify termination conditions. And guys, it's not hard. Focus on one thing at a time. Has anyone ever heard, how do you eat an elephant? Anyone ever heard that? How do you eat an elephant, guys? Okay. Zeba, how do you eat an 8,000-pound piece of tofu? Bite at a time. What's your first bite? Your first bite is odds favorable momentum. Your second bite is termination conditions. Your third bite is entries. And guys, your fourth bite is management. And then you spend the rest of your life getting through that elephant, finding better ways, finding more looks. And when you think you're ready, don't blow all your money on it, guys. Go to a prop fund. Let someone like Apex take a chance on you. Sometimes I feel like I get preachy. I apologize for that, guys. I have such conviction in what this path to success is because I've taken it. Because I've made every mistake that you're going to make, guys. I've broken every rule that there is to break. I've skipped study. I didn't participate. I never used a spreadsheet. And it cost me $5,000 over the course of about 2 days. To some people, that's not a lot of money. To me at the time, it was an awful lot of money. What I'm doing now is I'm trying to save you the heartache of making the same mistakes that I made. I'm trying to keep you from the frustration. I'm trying to keep you from doing what the average trader does and giving you an opportunity to bypass some of those pitfalls. Ziva, I think sometimes I get onto soapboxes more than I should. I need someone on Skype to go, dude, Mark, turn it down. Tone it down, buddy. All right, where are we at, Gary? Termination condition. Man, I'm glad we didn't go long into a termination condition, right? Smalls haven't quite broken through. It's not a 50-50 yet. So even though that's beautiful, Gary says, I don't have a clear path. I'm willing to sit on my hands and miss a trade if my rules aren't met. I love that. Here I have a 50-50. Then I got divergence, right? But it still pulls right back to an area inside of favorable large triggers. And it's beautiful. There's a little confirmation. Couldn't catch it in time. That's all right. But you took a picture so you can focus on the look, right? Guys, even if you don't catch a trade, there's something to be learned. Termination, just waiting. I love it, guys. Pre-trade. Take a pre-trade picture so that you can analyze your rules. Take a middle of the trade picture. It'll help you with management. Take a trade when the picture is over. And it'll let you go back and police yourself, right? Guys, look at this. 50-50 trade. Potential to break but hasn't broken. One divergence, you get an entry. Smalls work inside. There's one of those pivot stop outs. George, are you with me? Can we create pattern recognition? Look what happened off that pivot stop out, George. It pushed right down and took out the previous pivot by a tick and created a reversal bar up. It doesn't mean that it's heading up. But George, you were talking about that two divergence entry. You can begin to use patterns to say, well, if I'm already in it, this is where it's likely to push down, and you can decide if that's a management take that you want to have. Or you can say, I'm not in this trade, but it was a great bottom and everything says up, and I like what it looks like. I'd love to be a part of this trade. Well, I can create an expectation that this pivot stop out is my most likely spot and make a decision. Does that make sense, George? You can use these small chart divergences, these small chart patterns to give you an advantage, not only for entries, but also for management. And now it's still 50-50. So now if I get a third divergence, I can say to myself, this isn't a trade that I want to be in. Third divergence will be true right about there. So a break-even stop, if you got in here, or if you were willing to hold your risk a little bit longer, creates an amazing opportunity for you to take advantage of this momentum that's coming from a termination condition at an area with the potential to break that hasn't broken. Isn't that amazing, guys? You will be able to talk through this exactly like I did. 50-50, divergence prints. So you chose not to take the trade, Sam, right? That's okay. Sam, is this going to be a trade that you avoid for the rest of your life, do you think? Or is this a trade that you're going to begin to recognize patterns? No. All it takes is some repetition, right? Your ability to read charts will recognize advantages and create expectations, and you'll be very comfortable taking medium probability trades. Why do I focus on entries, guys? Does anything about those 13.2 triggers suggest that the market is going to turn on a dime? It's advantage up, isn't it? Is there anything about two divergences that says that the trend is likely to end? Guys, if you took the first shot and you managed out because of a second divergence, no worries, right? I don't like that. Sam, keep doing it, but take the pictures. Take the pictures. Sam, I want you to go back and I want you to annotate your chart like this. I'm going to steal your chart and annotate it for you, okay? Or let's annotate it together. Michelle, that's a drawing tool. That was me showing the expectation of a second divergence. That's all. It's not an indicator. I was telling George that when I get two divergences here and everything says up, no worries. The expectation from that pivot stop out here is typically a pivot stop out here. Well, Michelle, I'm pulling my fibs off. So some of the things you're looking at are absolutely... Is it guaranteed to happen? No, of course not. But Sam, are you ready to annotate your chart? Let's count advantages. And let's start with where the market's coming from. Strong bottom, right? It's a termination condition that creates a full reversal, no matter how I spell it. So let's start weighing options. I have a strong bottom, right? That sounds funny. I have odds favorable momentum, right? Like really good odds favorable momentum. Everything says up in the moment. Everything says up. It is 50-50. I have smalls broken through the area, and not just a little bit like, I'm hoping. These smalls are like kablooey right through resistance with amazing momentum. What do you think? How do you feel about that look? Does it matter if price goes higher or lower than the previous divergence, George? Right here? Yeah, absolutely. So this is the pattern. Let's go through Sam's entry real quick, though. So Sam, you identified the window, right? That's pretty concise. I love that. So let's go through it, Sam. You have the advantage of a strong bottom. You have the advantage of momentum. You have the advantage of a small window of opportunity. You have the advantage of everything saying up. What's your one issue on this one? It's a 50-50. The smalls are still outside the large here, and they're above that 50-50. There's a lot of reasons to get in. And then, Sam, if you decide to get out, yeah, there's a lot of reasons. They all start with a strong bottom. This doesn't have to be your trade, but if you annotate charts enough, you're going to begin to recognize patterns. So, George, this pivot stop out right here, my expectation when I have two divergences and it's a pivot stop out is that it'll typically take out the previous pivot at least. So it becomes a management opportunity, especially with the small triggers inside. I have to decide whether or not I want to stay in this trade, right? I might manage out because the smalls are inside, and then I have to be okay with whatever happens after. But if I know that this pivot stop out typically creates this look and it's still inside of those favorable large triggers and it's right at support and it lines up with a pretty good area, I may choose to hold a little risk on that one based on patterns. And let's see if we can catch a couple examples. So there's a pivot stop out on this one as well, George. I think this is the one that you showed earlier. Pivot stop out, and that pivot stop out lines up with support inside of favorable large triggers. Maybe a management opportunity, right? Well, I'm saying if you enter on the first pullback, well, then it becomes pretty obvious, right? But let's say you miss the first pullback, George, and you walk in and you go, oh my gosh, it's coming back again. You can go through this process and you can say, well, it's coming back from a pivot stop out. It's coming back with small triggers inside. The most likely scenario here is that it takes out that previous pivot with the loss of momentum with two divergences. So if I'm going to enter this trade, if I'm going to say to myself, you know what, I still feel like the 13.2 gives me an advantage, well, then you say, I'll enter at that low, at the low point of this bar, and I'll put my stop outside of the triggers. And because of the look on my 13.2, I've got a very calculated approach to re-entering this market. Or if you got in here and you're saying everything still says up, you know that if you put your stop at break even, it's more than likely going to get hit, right? In Ziba, it's ideal to be in on the first, because what's happening on the second? We're losing momentum, right? What happened on the third? There's a third divergence in the same general location with the small triggers inside, and it pushes right through that window. Do you see it? Best, still okay, but not the best. Three divergences says, oh, come on, guys. We're done. George, does that help a little bit? The first entry is ideal. The second entry, I can create expectations where it's coming from based on a pattern. The third potential entry is financial suicide because I've got three divergences in the same location. No, you're okay. Guys, you're going to learn to read charts, right? You're going to recognize patterns. And as you grow with the software, so will your plans. So will your management. The course is designed for new users. Sam, how long have you been with me? Where are we at? 15 days? Right? Cool. So Sam, unless you can do all of this assessment in a moment's time, absolutely give yourself the best chance of success, right? Guys, where you are today is not where you'll be tomorrow, and it's certainly not where you'll be in 3 months. So Sam, not taking this trade because of a termination condition is the best thing you can do for yourself as a new user. Not taking this trade because it's a 50-50 with divergence is the best thing you can do for yourself as a brand new user. Give yourself the highest chance of success. And guys, why do we do it? Because success feels good, right? Creates a dopamine response. If all you're doing for 20 days is giving yourself advantages, if all you're doing for 20 days is taking trades that typically win more than they lose, aren't you creating the memory of success? Doesn't that build confidence? Doesn't it inspire you and keep your morale high as you move forward? Of course it does. That's what we want. Why do we tell little kids, good job? Because they're like, hell yeah, I did a good job. I'm going to do a good job more. I'm going to do a gooder job. And yeah, George has been here for a couple years. But the same patterns that can help George manage trades are the same patterns that you're going to recognize as well. Not 20 years, since 2020. So guys, in the beginning, right? In the beginning, allow it to be simple. Allow it to be focused. Allow it to be streamlined. Don't overwork, guys. Focus on the best of the best. And know that the more you focus on the best of the best, Sam, exactly like you're doing, you're going to recognize things outside of that best of the best, and your plan is going to change and grow with you. Sam, when I first started, I never took a trade with divergence if it was a 50-50. And then through study, I found conditions that opened that door for me. And through more study, I became better and better at managing them. But you have to build a foundation, guys. You've got to create a solid platform. And that's what this class is. The first 2 hours of this class are embracing that platform. Embracing the fact that it's okay to be new, embracing the fact and getting these basic ideas down. Even with odds favorable momentum, 3 divergences in the same price range might ruin your party, right? Ziba, you saw this one, right? Straight into a mid-band, large triggers are above the reversal bar marker. There's that gap theory we talk about. It's not guaranteed to close the gap, but the likelihood is there. Sometimes I'll draw yellow lines on here just to confuse Michelle. Sorry about that, Michelle. So guys, while you were focused on just taking high probability trend trades, you inadvertently realized that now you're getting good at recognizing the gap theory. And Ziba, you didn't even know that you were studying that, did you? But you saw it almost instantly because you've heard it enough that you begin to recognize it. And you get to this point, you were like, well, holy smokes, I remember this. This says that this short loses more than it wins, so that's not a short that I want to be in, right? And guys, it wasn't an area inside of favorable large triggers. And you'll start playing this game of if-then. If-then. If this happens, then I'll do that. If this happens, it means my rules are met and there's a trade for me to take. Guys, there's a very, very clear path for you. And I'm going to put this one in the room one more time. You ready? To minimize your learning curve, this is how we're going to end the day, guys. To minimize your learning curve, post pictures of your trades in class. Every trade, win, lose, or draw. If you win and the rules are wrong, you may have short-term victory but long-term failure. How will you know the difference? Well, to be sure, you need feedback from us. And us is Nexgen, right? Us is me. I am your us. We are here to help. John Novak will jump in this room and help. I'll help. Your salespeople will help. If you place a trade on the simulator and participate in class, there's no risk of loss or capital, right? Guys, you can't lose Monopoly money. It doesn't affect your quality of life. You can still go out and have a steak tonight. You need someone to tell you what you did right or wrong when new. You need that feedback. You need that coaching. And this is part of the educational magic that Nexgen offers new traders, guys. 15 hours every week. My sole purpose in life is to give you feedback to help you reach your goals. Use this outline for education, guys. Step-by-step path to becoming a confident trader. Use a checklist provided right here in this document. Annotate your charts. Here's an example of how to do it if you have Snagit. And if you don't have Snagit, if you're using Capture, that's okay. Here's a great way to annotate charts to get the best feedback. Examples for you right there. And you're creating a database of rules met entries. Guys, there it is. I want all of you tonight, if you're brand new, to go through each of these links. And I want you to just burn that memory of a high probability trend trade in your brain. And let me know how tomorrow goes for you. Let me know if tomorrow brings clarity. Can you do that? Guys, here's your management plan. Define your management plan initially. Mechanical approach eliminates emotion or opinion. Tends to be the most straightforward approach for new users. You can alter your plan when you're done with the education, right? You can alter your plan. You can hold for bigger moves, take quicker profits. But this takes all the fear and anxiety out of it. And allow yourself 90 days to practice a mechanical approach to a checklist-based entry and an automated exit. It's not saying that it's going to take you 90 days to be good at this. Focus on your entries and keep the management automated. And guys, you're going to take those pictures of all those great trades and you're going to begin to create your management plan. That's the second bite of the elephant. And the guys, this is the best one. When you think you're ready, when it's time to go live, Before risking your capital, test your trading plan. Use a prop firm like Apex. They run sales all the time. For less than $200, you can trade up to $50,000 worth of capital. You get to keep the first 25 grand that you make and 90% after that. And if you make a $3,000 profit or a $2,500 loss, Apex gives you that $50,000 account to trade live. You can add up to 19 more accounts. Guys, you can trade like $900,000 of your hard-earned cash, but you're really trading $900,000 of theirs because you've proven to them that you can win with your trading plan. Use their money. And guys, you'll be glad if you don't pass. If you have an emotional day, if you blow out, you'll be very thankful that it cost you $200 instead of $5,000. Everything that we put before you revolves around the mistakes that we've seen in 25 years of teaching people to trade, the successes that we've seen 25 years teaching people to trade. There's no penalty for being cautious when you start trading live, guys. The actual harm comes from thinking that you're a better trader than you are. When you practice the wrong trades and make a lot of money on simulator, you're setting up for long-term success. Guys, I put this one in the room. Print it out and look at it. Save it. Read it every day. 3 divergences said the market may go down. Sure enough, it did. Smalls below the large are wide. They're angled. The smalls are through the area. The large are not. I'm going to draw a box just for grins, and I'm going to go from the top of my triggers to the bottom of my triggers. And I'm going to go from the highest point of resistance to the lowest point of resistance. And I'm going to say I have just identified where the market is likely to continue in the event of a pullback. See how quickly that happens through repetition, guys? What else am I noticing, though? I'm noticing that my lowest point of resistance, well, now those large triggers are coming down. That window's getting smaller, right? If it's a 50-50 trade, I can activate a limit order right at the bottom of that window, can't I? And then, Sam, if your plan says don't take 50-50 trades with divergence, and divergence prints on the 5-1, isn't it easy just to close right out and say, you know what, that's not my trade, but I'm going to keep my pictures. I'm still getting better at identifying the window of opportunity. And I'm going to see what happens. Because, man, this one isn't coming from a strong top, is it? This one doesn't have the advantage of a termination condition, creating a full reversal. This is nothing more than a pivot right out in the middle of nowhere. And that's the process, guys. You're going to keep going through it. So I have an area with the potential to break but hasn't broken. That it's not coming from a key area on my 13.2. My small triggers on my 5-1 are outside of the large, but notice how they're stuck at that fib that hasn't broken yet. And I have a pivot stop out here. And what you'll do is you'll start putting all this information together, guys. And you'll do it in a fraction of a second. And you'll get to a point where you'll say to yourself, you know what? If I don't know that this is a trade in the first 5 seconds, it's probably not a trade. I'm probably making something up to get me in. Actually, I am not off tomorrow, Safia. John Novak's recovering from COVID, and he feels like he's been hit by a truck. So I'm going to be here. Where are you headed? Other side of the world? I hope it's vacation. Enjoy that trip. Oh, very nice. Enjoy it. Have a blast. Take pictures. I want to see pictures. I love seeing y'all's vacation pictures. They're fun. Then I will see you when you get back. Gary, you say no HVA. Yeah, you're just caught in an area right now, right? Let it settle. Guys, it's been a great class. I appreciate you being here. I'm very thankful for the pictures that you post. I'm very thankful for the questions that you ask. I hope that you have gotten a little bit of clarity. Sam, I am not. We are going to do the regular class, Sam. John Novak is sick. He's going to come in on March 18th. I'm going to take a little vacation down to Austin, Texas to see my children. And he's going to take the class for me on that Monday. He'll talk about it. But Sam, if you have questions, man, I'll answer them in this classroom. Without a doubt. But guys, I always encourage you, make sure that you're comfortable with your plan. Where's Rockport? Rockport is, I've heard it. I can't think of where it is though. Guys, I'm going to visit everything. Port Aransas, I know where that is. Ziba, I lived in Houston for like 25 years. I'll be down there again. I think our next contract, guys, I think I'm going to go to the Northeast next. We're going to let all this wintertime nonsense finish. Maybe go to do New Hampshire for 3 months or so. Ultimately, I'll be back in Texas. Bobby T, if I end up in Port Aransas, we're going offshore and fishing. Because in Galveston, you have to go 100 miles before you get to the good stuff. Perfect. Down there in Port Aransas, you're in the deep water in like 15 minutes. I've done that a couple times. Nothing beats Vegas. My sister-in-law lives in Vegas. We go every now and then to visit. No, Dave B., there will not be. Nice. Dave B., John Novak was going to teach a market flow class tomorrow, but COVID has changed the plans. So it's going to be the normal class. But guys, always, if you have a question, ask it. I'll give you the best answer that I can. Oh, he's all right. He's strong like bull. He'll come back from it. I've had it 3 times. It happens. And they say every time you get it, you get stronger. So I think this is 2 for him. Guys, you can ask any question you want, always. If you have a high volume area question, if you have a market flow question, I'm happy to answer it. But I may redirect you a little bit. I may say to you, well, are you comfortable with your rules? And one of the things, guys, is because when you talk about those market flow charts, where did it go? When you talk about market flow, and everyone's excited, guys, I love market flow. I use it in my personal trading. There's an order of operations. First, you'll use it to confirm momentum. Then you'll use it to confirm areas. And then you'll begin to take that information that you get and identify maybe termination conditions and bar patterns. And that's what John's going to talk about in the middle of March, is a lot of that next level stuff. But I'm going to stick to my guns 100%. That if you focus on the best of the best, guys, 2 charts will get you where you need to be in the beginning, and then we'll just grow from that. All right, I'm going to call it a day. You guys are so darn interesting. I stayed over a little bit. Thanks for the questions, guys. I'll see you tomorrow morning, 9 a.m. We'll do it again. If you take trades this afternoon, if you do market replay, I want you to go ahead, take pictures, bring them to class. But what I really want you guys to do, guys, pinky swear, I want you to click through every one of these pictures and burn that image of the best trade in your mind. And let's see how tomorrow goes. Let's see if there's a little bit of clarity. I'll see you guys in the morning. Take care, everybody.